This is Mardiak Market Update. I'm Mark Mardiak. I'm a senior wealth strategist with Premier Wealth Advisors in the heart of New York City. And I'm a registered representative with First Allied Securities Incorporated, member of FINRA and SIPC. Thank you for joining me. This show will explore topics ranging from market updates to the global economy and personal finance. Money is knowledge, and I understand life happens fast. And this program, my views, I hope, will help you navigate your relationship with money with timely guidance and my unique perspective. Is interest on home equity loans still deductible? The interest paid on that home equity loan may still be tax deductible in some cases. Many taxpayers had feared that the new tax law, the Tax Cuts and Jobs Act of 2017, enacted in December, was the death knell for deducting interest from home equity loans and lines of credit. The loans are based on the equity in your home and are secured by the property. Home equity is the difference between what the house is worth and what you owe on your mortgage. But the Internal Revenue Service, saying it was responding to many questions received from taxpayers and tax professionals, recently issued an advisory. According to the advisory, the new tax law suspends the deduction for home equity interest from 2018 to 2026 unless the loan is issued to, in quotes, buy, build, or substantially improve, end quote, the home that secures the loan. If you take out the loan to pay for things like an addition, a new roof, or a kitchen renovation, you can still deduct the interest. But if you use money to pay off credit card debt or student loans or take a vacation, this interest is no longer deductible. As was already the case, the IRS said the loan must be secured by your main home or a second home and must not exceed the cost of the home to be eligible for the interest deduction. The IRS also noted that the new law sets a lower dollar limit on mortgages over all that qualify for the interest deduction. Beginning this year, taxpayers may deduct interest on just $750,000 in home loans. The limit applies to the combined total of loans used to buy, build, or improve the taxpayer's main home and second home. Often, homeowners borrow against their home equity because the interest rates are typically lower than other types of credit. A home equity loan works like a traditional second mortgage. It's borrowed at a fixed rate for a specific period. A home equity line of credit is more complex. Borrowers can draw on it as needed over an initial draw period, typically 10 years, during which interest rates fluctuate. After that, the balance typically converts to a fixed-rate loan. Let's answer some questions about home equity debt. First, do the new rules on deducting interest paid on home equity lines apply to my 2017 taxes? The answer is no. The rules apply to the return you file next year for 2018. Interest on home equity loans or lines of credit you paid in 2017 is generally deductible on the return you file this year, regardless of how you use the loan. But the interest may not be deductible on next year's tax return, depending on how you spent the money. Can I still use home equity loans to pay student loans or credit card bills? The answer, yes. You can use all or part of the loan for personal expenses. You just can't take the interest deduction on the amount used for those purposes. And finally, how should I document that the money borrowed was used for eligible purposes? It may be that the IRS will create a new form to go with the interest deduction, on which taxpayers will state the purpose of the loan. Regardless, it's advisable to keep records and receipts for your home improvement project, should you ever need to justify the interest deduction to the IRS. That's a wrap for Mardiak Market Update. I'm Mark Mardiak, and thank you for joining me today. Remember, you can find all the episodes on my blog at markmardiak.com. Always feel free to contact me if you have any questions about anything we've talked about, or if you'd like to discuss your financial portfolio. Tune in next time for Mardiak Market Update. I'll see you around.